Show you how to answer question on MFRS 110 event after reporting period. So let's go through the question. Final exam January 2018. Okay, question 4. MFRS 110 event after the reporting period define event after the reporting date as those events both favorable and unfavorable that occur between the end of the reporting period and the date when the financial statements are authorized for issue. So you are required to provide 3 examples of adjusting event. So remember, adjusting event are those events that provide further evidence of item that is existed in financial statement of that year. Okay, so the example could be measurement of the bad and doubtful debt because it relates to the account receivable in the financial statement. The changes in the net realizable value of inventory, it will affect the inventory and the net profit that you reported in your financial statement. Court case, which depending on the result or the decision of the court, whether the company lose the case or win the case, that will affect how you accounted those liability, whether it is a provision or contingent liability. Alright, and then impairment of asset and fraud. Okay, so you don't have to explain because the question just mentioned about provide 3 examples. It doesn't mention about explain or briefly explain. So you simply list the example. Okay, let's go to question B. The requirement is determine the nature of the above event, whether it is adjusting or non-adjusting with reference to MFRS 110, and explain the accounting treatment for each of the case above. So Bina Berhad is in the process of finalizing the final account before the approval by the Board of Directors on 1st August 17. So I have summarized it here. 1st August 17 is the date when the Board of Directors authorized for issue. The financial year end of BENA is on 30th June 17. So this is our financial year end. So remember, event after adjusting event after the reporting period is between after the financial year end and the date when the director authorized for issue of the financial statement. So if the event fall before that, means the event fall on the financial period, that of course will be considered as a transaction for 2017. If the event occur after the date the Board of Directors authorized for issue, then that will be considered in the next accounting period financial statement. But the event should fall in between of this gap. Alright, the first case, one of the BENA customer who owed the company 280,000 was declared bankrupt on 1st July 17. So 1st July is somewhere here between the gap. Okay, and this relates to your trade receivable, your account receivable. It means that this case, alright, provide further evidence that the amount that you disclose as at 30 June 17 is not accurate. So you need to adjust. So whether this is adjusting or non-adjusting, so the first case, it is an adjusting event. Okay. Second, on 15 July 17, the Board of Directors of BENA declared a final dividend of 5% to the existing ordinary shareholders. So 15 July fall in between. Alright, and you have to remember proposed dividend does not consider the company as having a liability on 30th June because the dividend is declared after the financial year end. Alright, so you don't have to adjust your financial statement, so we will call this as a non-adjusting event. Okay, right. The third one. On 20th July 17, one of the company's warehouse was destroyed in a fire. A loss of 200,000 is estimated for the damaged inventory. So this is a natural disaster. So if it is a natural disaster, it is a non-adjusting event because the event occurred on July, which is in between of this period. So this is non-adjusting event. So part B, explain the accounting treatment. So of course, the adjusting event, you have to adjust your financial statement. But the easy part is all the non-adjusting event, you simply disclose in the account. So we just mentioned here, disclose in the notes to the account. In the notes to the account. Okay, so same goes to case 3 because it is also non-adjusting, so it is also disclosed in the notes to the account. Alright, so for number 1, how do you do the adjusting entry? Because it relates, case 1, it relates to your trade receivable, where now your receivable should be reduced by 280,000. So we should say here the bad debts, okay, the bad debts of RM 280,000 should be written off from the account receivable and allowance for impairment of trade receivable. In short, it is called AFITR. Okay, allowance for impairment of trade receivable. So that's all for that 10 marks. Thank you.